Welcome to Kirk Spano's Fundamental Trends and Margin of Safety Investing. It is July 6th, and I'm out of the desert, and now I'm in the subtropics of Wisconsin, where it is about 90 degrees with 90% humidity. So very exciting that I live in the tropics. Today we're going to talk about the tariffs and how dangerous what is going on really is. I know a lot of investors are looking to buy right now. I have become a net seller in the last week because I do not like what is going on. I will explain why. You're going to have to put ideology and partisanship and whether or not you like President Trump or not aside. I will be very clear about this. I don't like either party. I haven't liked either party for a long time. I think they're both full of sellouts. I think they sell the people down the river over and over again, just in different ways. So, you really can't accuse me of being liberal or conservative, because I do believe in a lot of economic principles that would coincide with some conservative lines of thought. I'm also the one who's been banging the drum a bit for putting the pressure on Iran. And that stems actually from Iranian dissidents that I know. But on the other hand, I think that some of these deregulatory things that we're doing, some of the tax breaks for the corporations and the super wealthy are completely wrong. Not only are they not necessary, but they don't work. And that would probably be the most important thing, is that giving tax breaks to the super wealthy and to the corporations from Congress that is largely bought and paid for, pretty much on both sides. They're just bought and paid for from different people. That's going to all cause problems down the road. We saw what similar policies did in the early 2000s, and we basically have those same policies on steroids right now. So be very careful when you're reaching out for risk, because it seems to me that we are setting up for another crisis down the road. I don't think it's imminent, but I don't know if we can fight it off at this point either. So I am not very happy with what looks like is coming, and I think if we don't solve these trade issues quickly, we are going to be in big problem, big trouble, have big problems. So that's a sanguine viewpoint here, and I'm going to back it up with a few things, because that's what I do. First of all, remember Gary Cohn. Back in March, I wrote this little article. It didn't get read very much, but Gary Cohn left the Trump White House, and he had some very serious disagreements on what was going on in trade. Now, he's a trader, right? He's an investment guy with Goldman Sachs who, with an opportunity to make a lot of money, you'd have to think that he'd say, maybe I shouldn't be in politics. Maybe I should go back into banking. And that's what he did. I forget the firm that he's with. He's not with Goldman Sachs, I don't think. But we could see from these trade policies a very severe reaction that could kick off around October or November. And in the next few months, if we don't have agreements with China, with the Europeans, in NAFTA, I think you really are going to want to cover your tails. So the National Economic Council director now is a guy named Hewitt, I believe. He might be something else, but he's some economics guy in the administration. He was on CNBC today, and he said that there should be deals in the next couple of months. Well, I'm not so sure about that. when I see headlines like this, U.S. China digging for long trade war as tariffs take effect, all the different businesses that are being affected, exactly how much this is going to hurt. And we're talking about up to 2 percentage points of GDP. Where do we have 2 percentage points of GDP to not have? That could be the impact. So the Chinese are being strategic in how they do their tariffs, and that might give us a heck of an opportunity. So I'll talk investment opportunity here. Soybeans are getting crushed. Gary Cohen's not president of Goldman Sachs right now, I don't think. He might be, but that's where he was. Soybeans are getting crushed. I mentioned soybeans about a month ago, something to watch. And we're going to have the Turkeyum guy, the ETF family, talk about, so he's going to give us a presentation on that in the next couple of weeks. He disappeared on me, so I have to track him down again. But I think soybeans might be a very interesting investment for us just because they're getting beat up so badly. Symbol here is soy B. You can see, oops, there we go, 5-year chart. That's quite a collapse over the last 5 years, but even in the last, several months, in the last couple of years. So China is not buying soybeans right now. So then what that means is that the farmers are going to have to clear their inventory. So next year they're not going to plant as much soybean. And if we do get deals on trade, that should create a supply-demand imbalance. So we need to figure out what is the bottom on here, what's going to be near the bottom, and how do we play it. Clearly, there's not a ton of movement, so we're going to want to use options. But if this keeps falling off, and I don't know what the all-time low is. I think we're at the all-time low for soybeans now. Does this go to 15, 14? I don't know. So we're going to have to do some research on this. But this is a type of chart that should make you go, there might be an investment opportunity there. So that's something that we'll look at in coming months. Back to trade and tariffs. I want to talk about this idea of stagflation. Now, if we slow the economy down by a couple percentage points, and we're already running hot, right? We're seeing very good unemployment numbers, but we're starting to get some divergences in where the jobs are going. So we're not getting real high-end job growth, right? There's plenty of engineering jobs out there and nobody to fill them. And these other industries, take a look at where the extremes are, right? Museums, right? Motor vehicles and parts, and that's probably bad, at least for GM and Ford, if they're having pressure right now because we're not selling as many cars. So that's a problem. And car sales are probably not going to rebound. Credit's getting tighter. There's been huge numbers of cars sold the last several years. So, remember the old adage, some of the folks who are older than me here, or at least paid attention when they were kids if you're my age. As goes what company, so goes the U.S. economy. What company was that? It's General Motors, right? General Motors used to have indirect ties to over half of the jobs in America. It's not like that way. It's not like that now. Now it's in the 20s. But if you take the car manufacturers together, you take Ford, you take GM, to a lesser extent Chrysler, and even Tesla now. Tesla's not really employing a lot of people, but the technology aspects I think that that's going to see a big fan out in coming years. So, as we get the rise of electric vehicles over the next decade or so, um, if car sales stagnate because people want to stretch out their uh, gasoline-powered vehicles before they buy an electric vehicle, right? Because they're not going to just. I'm not going to throw out my gasoline-powered 4Runner, right? Just because I can get a different one, because my 4Runner is perfectly fine. I drive it 30,000 miles a year. I go to the East Coast. I go to Texas. I go to Dakotas. It's a great car, but at some point I will replace it. But I want to get as many miles out of this truck as I can. So I've got 180,000 miles on it. Could I afford one? Sure, but I'm pretty sure this vehicle will go 280,000 or maybe 380,000. The last Toyota I had went 387,000. So you take a look at people's behavior, and we're in this transition from gasoline-powered cars to electric vehicles, and I think you're going to see a lot of people bargain hunting for their last gasoline-powered car. I do think SUVs will probably do very well, and so will pickup trucks, because people will look at those as the cars most likely to keep using gasoline. And then as people buy sedans, they'll buy the EVs. But when? 2 years from now, 4 years from now? I think it's more like 7, 8, 9, 10 years from now, but we'll see. So if we get this stretching out of the car buying cycle because of credit and because of the transition in that industry, which is a gigantic industry, as you can see, somebody had an automatic order in there, sold a little floor. That could have a huge impact on the economy. So keep an eye on automobile sales. It's usually a leading indicator, and that's something that we need to keep an eye on. With what's going on, and what's going on in the tariffs, though, it's going to impact, the auto industry. That's one of the targets of the Chinese. So in this trade war, I know there's this idea that we're doing what we're doing because it's fair. I'm not so sure that's true. One thing that people have to realize is that services are not subject to tariffs. And the United States is one of the largest provider of services around the world. So at this moment, while we might capture just a little bit of extra manufacturing, all the services that we're providing around the world are getting switched to other producers or other providers. When you take a look at Accenture, Accenture's already felt it. So you have companies in America that provide services all over the world. Fluor, for example, which I love that company, but they're getting beat up. A little rebound lately. So if we have a misrepresentation of what the deficits really are, the trade deficits, and I'm telling you that we do, so we're essentially picking winners and losers with these trade tariffs. This is not good for American employment. It is not good for inflation. It is not good for the dollar being the reserve currency. And I really want to expand on the whole reserve currency concept. There's two reasons that the dollar is the reserve currency, and there's actually a huge list of sub-reasons. But the two big reasons are, A, oil is traded in dollars, the petrodollar, and B, most global trade is conducted through banks that use dollars, and most of those banks we control. So if we restrict trade, and it's pretty clear that China's going to be buying oil in yuan very soon, probably as soon as the Ayatollah's gone. I think those two things are connected. Then what happens to the dollar? We'll be a co-reserve currency with the Chinese. And I wrote about that, a long time ago. If you go over to my firm website, Blue Mountain Asset Management, and go up to letters, I think it works. I think I wrote about this way back in somewhere right around 2010. So 8 years ago, I was talking about might be this article. I don't know. It's one of these articles from 7 or 8 years ago. I was writing about how the dollar and the yuan would be co-reserve currencies at some point. And that makes sense because we're both a quarter of the global economy right now, give or take. So if we are no longer, excuse me, no cough button. Drink a little bit of green tea here. If we become a co-reserve currency, what happens? Well, that opens up an opening for the Europeans, the euro, to get in there too. Now you have multiple reserve currencies. What happens? That opens up a crack for the IMF to say, why don't we just use special drawing rights? We don't really control the IMF so much anymore. We used to control it, and now it's a lot more democratic, and that may or may not be good for us. So if we lose reserve currency status, and I think it's going to happen, and this is important for us to understand, the dollar has been the free ride of a lifetime. Not for a year, not for 2 years, but for a lifetime. If you're 70 years old right now, you have benefited from the dollar being the free ride of a lifetime. It has driven American wealth since World War II. So if we lose that, and I think we're going to in the next several years, then we have to adjust. What does the trade have to do with that? It accelerates the process. By restricting global trade and making dollars less necessary to other nations, they're going to sell off not only our debt, and the Chinese can do that in spades if they want to. We could see the dollar spike and then crash. And that is just not a good combination. As an investor, we can game that, right? We can make money on that. But for the ordinary citizens out there, for the 2/3 to 80% of Americans who really don't have anything saved up, then what does that do if we get inflation? What does that do to standard of living if we don't have economic growth? What does that do to the social infrastructure of the country, right? So these trade actions, rather than integrating deeper with the world on trade, which is what we need to protect the dollar, we're pulling away from the world on trade, and that's going to hurt the dollar. So, I've been a big bull on the dollar since 2012, and I backed off a couple of years ago. So I think that people need to take a look at the big picture here and really consider what we are setting ourselves up for in the next couple of years. And if we don't actually get deals on trade, right? If we don't take those marginal deals that I talked about a while back, I don't have it marked here, but I did talk about trade, that there would be good resolutions. I said that back in March or let's see here. April. Expect positive surprises on President Trump's trade policies. So I'm not a Trump hater. I mean, I actually think he's a little bit more immoral than Hillary Clinton, but I think you're splitting hairs at that point. I've been expecting positive surprises on these trade policies. I'm not so sure anymore. What's going on this week is dangerous, and you have to accept that it's dangerous. And while everybody wants to be bullish, right, and everybody has FOMO, fear of missing out, you better start thinking in terms of a different acronym. So I've come up with a new acronym. It's fear of getting ass kicked. FOGAK, FOGAK. So you better have a fear of getting your ass kicked. And I guess I could put a Y in there. Fear of getting your ass kicked. Fog yak. Better than FOMO. If these, I mean, we're at that point. We're at the cliff right now. And there are catalysts in October and November with deadlines and with the Iranian sanctions. If we don't have solutions in like the next 2 or 3 months, we could have a massive blow off in the stock market come this autumn. And I haven't been preparing much for it because I don't think it's going to happen. But it's more likely to happen now than it was a month ago, and than it was 2 months ago, than it was 3 months ago. So we keep moving in the direction where these trade policies can cause major, major damage. And I want to reiterate, for all you folks who think that we're getting protected by tariffs, you're wrong. You're ignorant of economics, and you better take a step back, because if you're being directed by ideology and politics, it's going to cost you money. And it's probably going to be bad for the country. So, there needs to be pressure on President Trump to cut deals, even if they're only marginal improvements. And I'll tell you something else. The narrative that's out there about China stealing technology, man, I used to play poker with a guy here in Milwaukee, and he was a research scientist at the Medical College of Wisconsin studying cancer. And the first time I met him, his name is Chung Hee. I still have his phone number. He keeps it active. I call him when I'm playing poker with the guys once in a while. We try to talk to him, but he hasn't answered the last couple times. I was calling him a spy by the end of the first day I met him. And you know what? I was right. He was at the Medical College of Wisconsin. He took all of his knowledge that he got there back to China. And you know what? So goddamn what? It was cancer research. You want to keep that secret? What about the technology and the computers and semiconductors and all these other things? Do you really think that the Chinese are taking our best technology? Do you? If you do, you're wrong. Second, if they're improving the lives of the Chinese people, do you or do you not think that that's better for the United States? Do you want 1 billion hungry, economically depressed, cold Chinese people? That's an idiotic thing to think. So this idea that technology transfer and technology theft is a big deal, it's insane to me, because technology changes every single day. And if we're doing the best technology, we'll always have the lead. So this backdoor way of saying, hey, let's prevent them from getting technology, it's an ass backward way of thinking, because A, you can't stop it, right? It can't be stopped. If they want to go and take a Tesla and reverse engineer it, that's what they're going to do. The thing that we need to be doing is working out a deal so we get some compensation, right? So tariffs, that doesn't solve any problem. And does it even put pressure on them? No. The Chinese are like, look, we're a quarter of the world economy. We got 4 times more people than you. So they're going to alternative energy faster than we are. So it's not like we have a lot of leverage on the Chinese. Now, can we make it hurt for both of us? Yep, we can definitely create a lose-lose situation, and that's what I'm afraid is coming. It seems to me that we are setting up for a lose-lose situation. And I'll tell you what, if it hits before the fall elections, right? If we have a stock market crash before the fall elections, if we see a downtick in GDP, if we see this as the peak in the labor cycle, then we'll get this big blue wave, and then we have a different problem. Because if you noticed, the woman who just won in New York is a socialist. She wants a government guarantee on employment. That's equally dumb. So, if you're in New York and you voted, I don't even know her name, but she was some 28-year-old that ran against the guy that was possibly going to be Speaker of the House someday, and beat him in a primary. And she's talking, she doesn't know anything about anything, and she's talking about government guarantees on jobs. Good God, are we that stupid again? So we need to pull our heads out of our collective asses, and we need to stop with this idea that tariffs work, because they don't. They never have. Go look at history. They've never worked. And second, we can't let the pendulum swing so far back to the left that we just have a new set of problems. We need to find balance. We need to use common sense. And right now, we have the extremes controlling the narrative, and it's going to screw us up. So all you people in the middle like me, which is really 60 to 70% of the population, get off your thumbs and go and vote this fall, and vote for somebody who has some common sense. And don't vote for the guy who keeps America whiter, and don't vote for the woman who wants to have a socialist revolution. Don't vote for Bernie Sanders because he's good at picking out who the jerks are, but he sure has no idea what the solutions are. Or we're going to get jammed with another crisis, a lot like the 2008 crisis. And I think we're already setting up for 1980-81. And I grew up during that. So let's have a funny story. So in 1980-81, most of the guys in my family, most of the men in my family lost their jobs. And my dad had to transition, going from a great job at American Can Company, which, trivia, what did the guts of American Can Company become? Citigroup. Can you believe it? So they sold off the cans, stick the pension in the insurance, get Citigroup. And anyway, so while my mom was in school and working at Kohl's, back when it was a grocery store, and my dad was an apprentice again after losing his job at American Can Company, they'd pass. And my dad was in charge of dinner most nights because my mom had to go from work to school, and it was pretty quick. Hi, Mom. Bye, Mom. Have a nice night. See you on Friday. And we'd get shake and bake chicken on Monday, shake and bake pork chops on Tuesday, and shake and bake leftovers on Wednesday. You know what I won't eat anymore? I will not eat shake and bake. Now, here's where it gets real funny. About 10 years ago, I was dating a woman, and I was telling her about this. I said, if you ever want to break up with me, make me shake and bake. Sure enough, 3 months later, I walk in the door, and we only see each other 3 or 4 times a month because we lived about a half an hour, actually about 45 minutes apart. Both had kids at the time. Walk in the door, I take one step in the door, and I can smell it. I can smell whatever chemical that is in shake and bake. Go in there, sure enough, she's making shake and bake. And she's very pleased with herself. And, I peel off the skin and I eat a little bit of meat and just thought, hey, I wasn't terribly hungry today, but hey, great. Didn't call her for 5 or 6 days. I was a little confused. She calls up and says, hey, are we going to do something this weekend? And I was like, I'm not really sure that you want to do something this weekend. And she's like, why? I said, you made me shake and bake. And she's like, well, I thought it would make you feel like being a kid again. Well, I didn't know how to take that, because either A, she's playing it pretty cool with wanting to break up because she made me shake and bake, or B, she just doesn't listen. Either way, it's not a good situation, right? So we broke up. But in any case, that's the situation I'm afraid we might get back into again. Stagflation, people having to work second jobs to make ends meet, and we could lose a generation. These millennials, if we stick them with a horrible economy like they got when they started, it's warmed up in the last 7-8 years. But what if we give them another 10 years of crap economy? That would destroy the country, because the millennials are the ones who have to pay for the baby boomer retirement, and me to a certain extent. But the millennials, if we screw them, and it certainly seems to me like we're getting ready to screw them, man, Katie barred the door. There's going to be, I hate to ever think that there'd be more bloodletting in this country, but I don't know. It could get bad. All right, so I'll take a look at some of these questions here. I'll work from the bottom up. Quaters. I agree that tariffs are not the answer. They are a tax on Americans. However, technology theft is a real problem. No, it's not. Bullshit. I'm calling bullshit on technology theft as a real problem. It's not. It is not. And it is stupid. There just isn't that much technology being stolen, and we steal as much as they do. You can say from experience, it's not a big deal. It doesn't change the dynamics of the economy. Now, does it hurt a company from here and there? Yes, it hurts a company here and there. But if a company is dumb enough to get into an arrangement with the Chinese without safeguards, that's their fault. They're choosing the greed of trying to get into those markets versus protecting themselves. That's an executive decision. Blame the executives, right? You know that everybody in the world wants everybody else's technology. We steal everybody's technology, and we manipulate our dollar more than anybody else manipulates their currency. And if anybody doesn't think that's true, then you haven't been paying attention. And I know that Star Spangled America and everybody's, proud to be an American, and I'm patriotic too, but I'll tell you what, it's baloney that we don't manipulate and that we don't steal. So just accept that that's the way it works. Now, should it work that way ethically? No, it shouldn't work that way. But it does. And to say that the Chinese are stealing more than we're stealing, well, then maybe we should steal better, right? Because the Israelis got really good technology. We could use some of that, right? Well, I don't care. I don't care. I've been studying this stuff for 30 years. I've been studying this stuff for 30 years, and I'm telling you that technology theft is not that big of a deal because we do it too, right? And we're hacking other countries the same way they're hacking us. Should we resolve all these issues? Sure. And we should all kiss and make up and play nice together and sing Kumbaya. But it just doesn't work that way. It is a dog-eat-dog world. It's going to continue to be that way. And so you just have to protect your interests, and you do it yourself. You don't say, hey, China, stop stealing from us. No, you just protect your stuff from getting stolen. That's executive decisions gone wrong. And I will tell you, the American executive officer has gone downhill for 30 or 40 years. It's horrible. Pay has gone up 6,000% or whatever it's gone up, and we've lost jobs, right? The middle class has shrunk since the early 1980s. To blame it on China? Bullshit. Our executives and our politicians have sold us down the river, and that's just the way that it is. So if you want that to change, call to account our politicians and our executives and find people who aren't bought and paid for. That's the problem. It's not the Chinese having a semiconductor that runs 10% faster. All right. And if you want, and I will write an article that lists 1,000 things why that's not right. It's not name calling. It's very genuine. When I say bullshit, I mean it. I I can smell shit from the cows from 2 miles away when the wind is out of the southwest. That's just the way it is. Yeah, I mean, I don't know about all C-level positions, but our corporate executives have really been poor in my adult life. Actually, since I was a teenager, since the early 1980s. We have this inbred East Coast executive machine, executive creating machine, and we get people from other parts of the country to buy into it. That capital is all knowing and all powerful. You know what? There's this guy named Abe Lincoln, right? Capital quote here. What is Abe? There you go. There you go. Abe Lincoln. Labor is prior to and independent of capital. Capital is only the fruit of labor and could never have existed if labor had not existed first. Labor is superior to capital. There's much higher consideration. He said this in the 1860s. And we still haven't learned this lesson. We haven't listened to Eisenhower, who was a president and warned us about the military-industrial complex, and we haven't listened to Lincoln, who's trying to tell us that labor should come before capital. Now, actually, my 4th of July letter is actually freedom to save capitalism, right? And I believe that capitalism is the best system out there. However, we have bastardized it. We have allowed people to steal. They bend the rules to favor themselves, and they hurt us. So as an investor, we can't even look at a company now and say, hey, this is a great company, let's invest. We have to consider what the central bank is doing, which is why I have this core 4. We shouldn't have to look at what the central bank and the Fed and the government are doing. They shouldn't be able to hurt companies that badly, but they do. And then on top of that, we have bad managers all over the place. That's what you should be fighting against. Not saying the Chinese steal a little bit of technology to make their semiconductors 10% faster. Good grief. How is the market so stable with what's going on? 2 reasons, I think. One, there's still a ton of money out there. I've been saying all along, there's a ton of money floating around, but it's starting to dry up. And second, FOMO. People are afraid of missing out. You know, think about the questions that I get. What should I buy? What should I buy? What should I buy? When was the last time one of you asked me what I should sell? All right? You should think about what you should sell. Because if you're not sitting on 25% cash, you know, I made 14% this year and 48% last year. 48% last year sitting on an average of 31% cash, and 25% cash this year made 14% in the first half of the year. You can make those types of returns without being fully invested. And you should not be fully invested because, oh my God, it's going up and I don't want to miss out on a couple points. Because when this market drops, think of August 27th, 2015, whenever that day was that the market opened 1,000 points down. It's coming again. You will wake up and the market won't just be down 1,000 points. The S&P will be down hundreds and the Dow will be down 2,000, right? Because the circuit breakers kick in really around 10%. If you think that you can't wake up with the market down 10%, you're wrong. And not only are you wrong, I categorically guarantee you it will happen in the next several years. And that's when your shopping list is important. And having cash to buy is important. Tech stocks, chips in particular, have gotten pretty well beat up in the trade wars. I like some of the chip stocks, but I'm not buying NVIDIA. I loved it when it was under 100. Now, what is it now? Like 17 million? You know, I don't know. There's no value there. Intel is a company actually kind of like AT&T. Remember, I've told you I think AT&T is going to break out to a new trading range. It's been in a trading range for around 20 years, right? From low 40s to low 20s to low 40s. I think it's going to break out of that low 40s as a top, and that'll become the new support. Once they start getting revenue from 5G, and they start selling a little bit more of their packages. You really have to consider that the Trump administration probably was right to fight the AT&T merger. They probably were, because you're going to see your cable bills go up, your cellular bills go up, or whatever. I do DirecTV now because it's at the moment it's a decent deal. But all those prices are going to go up because they're controlling content. So the delivery mechanism got very cheap, and that drove up the price of content. But now the delivery mechanism, because of consolidation in the industry and less competition, right? Consolidation in any industry always is good for the companies. Why? Because they eliminate competition. They get more price control. Same thing is happening in telecom. Telecom's been doing pretty well here lately. It's stabilized and it started to tick up a little bit. So I think Intel is a lot like AT&T. They are the granddaddy of the brains that are in all these computers. So if you're a dividend growth investor, right? You're not just looking for home runs, but you're cool making a market return with a dividend on top. Intel, I think, is like the best company out there to do that. Why? Because they are at the heart of all the smart everything world, right? The smart everything world is coming. We know it's coming. Who's going to be the leaders there? NVIDIA, but they're priced to perfection. Micron, I think, is probably still going to 100. So, around 50, I can add to that, upper 40s. I love selling puts on Micron. I mean, it pays me every time. AMD is looking real interesting to me again, because I do think they're going to capture some market. But it wouldn't surprise me, now that new competition has emerged for Intel might finally buy AMD, or they might buy Micron. We'll see. I think there will be more consolidation in the semiconductor space, and that'll be good for somebody. So I own XSD, right? XSD I own, which is the semiconductor ETF. The reason I own this one is because they also have some solar power in there. I love sun power. So for people who don't own stocks individually, look at this fund. 35 holdings. You've got Sun Power, Synaptics, Cirrus, First Solar. A couple of these companies, I don't even know what they do. Marvel, Advanced Micro Devices, which I think is a buyout target again. Skyworks. You go right down here. I don't even, Intel's way down here, but it is relatively equal weight, right? So it doesn't much matter, whether they're first or 20th on this list. But you got 35 companies that are all around 3% holding. This is a great fund for people. Sell puts on it. And if there's ever a real good correction, you buy calls. LRCX. I can tell you right now, I'm not going to know who that is. All right. LRCX. Oh, Lamb. I know who they are, but I can just tell you, look at this chart. Do they belong at 172? A couple of years ago, they were 75, so they've more than doubled. Quarterly growth is good. Debt is low. I don't know. Yeah, we have to. There you go. We have to look at this one. I'll make a note. Look at Lamb. I don't know exactly what they're doing right now. What makes them special? And that's always a question you need to ask. What makes them special? What makes them different than the crowd? I don't know. I'll have to look it up. GM. Yeah, that's right. So, I have a small token position in this. I do not have calls anymore. I took profits on those like right at one of these tops. So that was good. We have to see what the adoption is. So what you really want to do is figure out a way of doing a channel check, and that's hard, right? So I'm trying to find out how many hospitals are really adopting this. They have a test that just got passed by the FDA that's pretty interesting. Doesn't have a lot of competition, to help catch sepsis much earlier before it kills you. So I like these guys longer term. There's another little biotech that somebody turned me on to a year ago that's on our list. I think it's on our list. If it's not on our list, it's probably getting added. If you don't own any T2, I think you can put 1 or 2% there. I'm not ready to do another option trade on it. Yeah, Cody Willard and I see eye to eye on a lot of stuff. He doesn't like PayPal. I love PayPal, but we neither one of us like either party. Cody's a good guy. He's a good guy, and he sees things a lot along the ways that I do, and there's lots of people who do. The two-party system is great because in the long run it works because it tries to moderate us, but it's been getting where the pendulum swings are too big, right? And we're having problems. So we'll see. Yeah, you're right. The executives for sure lining their pockets, and then they cry. Oh, they're stealing our technology. You let them do it. I think that if this turns into a full-blown trade war come this autumn, nothing does well. I think that you see the market sell off hugely. So, that's why I'm saying 25% cash, and I think I'm moving to a higher position in cash. I'll err on having more than 25% cash than less. If you've been selling puts during the upswing and you've made any of these option trades and you've owned some of these stocks, you should be up at least 10% this year. So don't be a pig, right? You got to protect yourself sometimes. We don't know what's coming next. And when you don't know, probably shouldn't be as aggressive. Overstock with their blockchain venture. I don't know anything about that, but I will tell you, a lot of these companies that are doing things with blockchain are going to see huge incremental improvements in their business. So, I can't say anything about Overstock in particular, but it is very much worth getting to learn about. PayPal has some incredible blockchain stuff going to the point where I think that these partnerships that they've been working out with Visa and Apple and everybody else, I think PayPal is a big deal because they don't need to get 2% of every transaction. If they're growing at a high rate and they can capture some international transactions, I think PayPal can quadruple from here. And I bought them at the IPO. It was one of the only companies I've ever bought, at about the IPO. Any opinion on cannabis-related stocks? Well, I can tell you about cannabis. I was just in Las Vegas for 3 weeks, and there's cannabis everywhere. Dispensaries, and you can smell it on the street and in your hotel hallways. It seems like everybody's smoking weed. You know what weed stock's going to do well? The one that can make it not smell like weed. Right? I don't need to get a contact high or at least smell it as much as I've been smelling it. Here's the thing with marijuana stocks. Most of them are priced way higher than the revenue they'll ever do. So you got to be real careful. There's one out in Canada that's interesting to me. I don't know which one it is off the top of my head. I will eventually talk to David Modell marijuana stocks. There we can find. Here, you want a good video? David Modell is a good guy. I don't know if this is a newer one too. So here. There you go. I don't know if all this is right, but he's got a good view. I mean, he's really paid attention to these stocks. So I'm actually going to collaborate with him. I asked him about it months ago, and I just haven't had time. But you want to learn about cannabis stocks? Here, I will share this to my Twitter. So I hope you're following me on Twitter. There you go. It is on Twitter now. But Dave Modell's got a pretty good. He's been just doing ground up work. He was interested, and you should watch. He's got a lot of great videos. So, he actually. Good grief! Does anybody else hate autoplay? He talks about some of the technical things. So, and he decorates them. So I use RSI quite a bit, right? I use a relative strength index, so these are all things that you can use. But I would follow David Modell if I were you. He knows the weed stocks way more than I do. What do you think is the most likely scenario for Iran to play out until the end of 2018? I was talking to a real analyst yesterday. And I think that President Trump's going to keep putting screws to them. And I think that the movement to get rid of the Ayatollah is going to continue to grow. However, that movement will be met with major resistance and bloodshed. I think ultimately, come November, I think the Iranians are going to mine the Straits of Hormuz. I can't see any reason why they wouldn't. I don't know how densely they'll mine it, but I think they'll mine it and force a slowdown in the global oil trade. So, what does that mean for oil prices? It means they probably go up because there is no hope of a resolution with Iran. None, right? The nuclear deal with Iran was designed to stretch out the period of time before they got nuclear weapons and hope that the Ayatollah would die so that new people could come into power and we could work with them. The Ayatollah seems like he's going to live to be 7,000 years old. President Trump doesn't want to wait, and so he's putting pressure on Iran. Now, in my opinion, I think it's worth putting the pressure on Iran because those people deserve a better standard of living over there. They deserve not to be oppressed. And you have a huge population that's under the age of 30 in Iran. Huge. It's like 2/3 of the people. And they're putting pressure to change the regime. So we need to understand that what's about to happen there is probably for the good of the Iranian people and ultimately the world, because the Iranians are awfully good people. They're very accomplished, very intelligent, very motivated to live a Western style of life, regardless of whichever religion they pick out. So I think that we probably see a major escalation in Iran come October, November. And I think that drives oil prices higher, which is why this weekend, if you're a member of Margin of Safety Investing or Fundamental Trends, you will get a list of about 7 trades to make that coincide with that theme. I've been holding them back because I wanted to tell everybody to back down, start thinking, forgetting about FOMO, and start thinking about FOGAC. Let's call it FOGAC. Fear of getting your ass kicked. You need to be worried about that. You need to have 20, 25, 30% of your money in cash. We'll be recommending any shorts when appropriate. I have been debating that. The problem is every time you take out a hedge, it ends up just costing you money, right? So, what have I said? Sometimes the hardest trade to make, and I've heard this from Cody as well, the hardest trade to make sometimes is the right trade. So, should we be looking at puts on the SPY? I think maybe we should. All right, so we go to NASDAQ. This is a go-to place to get option quotes, by the way, for CBOE. Yahoo doesn't actually always have everything. So look at the option chains. And the reason you use options is because the leveraged ETFs can eat into you over time. At least with this, you can measure the time value. Option chains. Come on, moving that speed. I got too much stuff up. I pay for 400 speed internet. Maybe it's their website. In any case, SPY puts are a little bit cheap right now. They were cheaper back in February when we bought those, and we did the volatility calls. I think, yes, I think we're probably going to be doing, I think we're going to do some December puts on the SPY. Come on, man. Killing me, Smalls. Calls, but near the money. Let's just do monthly. Man, this website just doesn't want to work. I went to the right one today, didn't I? So anyway, I think we're probably going to buy some puts on the S&P 500 index. We're going to have to scale in over a number of weeks because we don't know how high this market could go. I do think with all the money that's still out there, if they do resolve some of these trade issues, then my earlier idea that hey, there you go. Went to July. I wanted December. My earlier idea, when I got mocked for saying this too, and it was right at the start of the rally. When did I say the S&P 500 was going to go to 3,000? I don't know. It was in here. So here you go. The S&P is about to rally to 3,000. So since April, what has the S&P 500 done? It's round tripped, right? So you go back to fundamental chart, 3 months. It's actually up. But it did come down a couple times. So I said this back on April 13th. Yeah, so April 13th, it was 265. Now it's 275. So it's up a little. But you can see, what if this had broken out? And I think that it will break out if we settle some of these trade issues. My concern is that we're not going to do that. And, so we're in no man's land, which is, again, why I caution everybody to be too excited about loading up their portfolio. If you initiate, do you plan to share with us? I always do. I don't bang the drum, and you can certainly close when you want to close, but I always tell you guys when I close. Yeah, I don't know what that means. They're all about cash flow. TPG. Yeah. You'd have to study that. Buzzwords like cash flow and dividends and things like that, you have to understand the underlying assets, what their rights are, whether there's really any growth. And if there's some sort of discrepancy between what they're getting today and what they'll get tomorrow, either positively or negatively. So that's what you need to study there is, is this a royalty trust? Is that what this is, a royalty trust? No? I don't know what this is. I mean, it's newly or blank check company. Merger capital. Oh, I see. Yeah, who knows? So this is going to be based on the value of their deals. Probably wanted to buy it way back here, right? So I'm not really sure. I'm not so sure it looks all that great. Some of it's my money, but it's also client money. I also have money over at TD Ameritrade as well. So, yeah, there is one account on there that I show specifically. So here you can see in the bottom right, I think you guys can see it, just sold Panasonic at 1280. Set the limit order in a little earlier today. And what I'm doing is I'm cleaning up portfolios. So I've been getting new portfolios here because I really wasn't taking new clients last year. But I decided to take clients this year. And I'm behind on writing investment plans. So to everybody who I owe an investment plan to, just know that it's basically going to say, we're going to hold a lot of extra cash and we're going to invest in technology change. And for the short term anyway, we're going to be in energy. And I think that the market's at a lot of risk because we could see some stagflationary stuff. So there you go. But the biggest trade clearly is energy. I think energy is just an easy trade for the next couple of years. But long term, we do want to be in all these smart everything stocks. I mean, the smart everything world is going to be upon us a lot quicker than I think people realize. By 2025, we're going to have computers that are 10 times faster than the computers today. We're going to have cell phones that are so powerful that you don't need to add anything to throw a signal to a TV, to a new monitor, um, you know, to affect all sorts of transactions. Blockchain's going to be everywhere. Blockchain, Internet of Things, BIoT, look that up. Blockchain, Internet of Things, it's going to be everywhere. So, all right, where are we at? We're an hour in. All right, last questions. Fire them away. I announce when I do close, but people often want to know. So I have a question about when I close swing trades. I don't usually close swing trades all in one try, right? I sell incrementally. So once I'm up, I scale in, I scale out. Um, so here, I still own USOU. This is an ETF portfolio, 4.21% of the portfolio. You see, nothing's super heavy overweighted. So I got about these are about a half a dozen clients here, maybe about eight clients here. So you see, most of my money is just about 15 clients, and then mine. So still on USOU, 5.55%. XOP calls have been running, and I'm not about to sell those anytime soon because I think this could really go through the roof. Now I am going to roll these out at some point, and but I don't like paying for all that time value, right? So I've sold a little bit of USOU, about a third of the position. Why? Because these are retail accounts. And that's something that you have to understand. These are retail accounts that I manage. Your accounts are different. You're not constrained by the rules and regulations that I'm constrained by, right? This is OTM, other people's money. I got to be very cautious. Now, I have accounts that are up 30, 40%. Why? Because they give me that latitude. But somebody who's 65 years old with $1 million or $500,000, yeah, I'm not swinging for the fences with them. Right? I'm trying to grind out gains and protect their capital. So, would I like this to have been 20% of the portfolio at one point? Sure. But retirement income options, that's what RIO stands for. I'm not doing that with people who, can't afford a 20 or 30% loss. So it is. Now these XOP puts calls, I'm in love with those right now. They've already doubled. I've owned them less than a year, and they've doubled. And I think you're gonna see XOP over 50 here by November. So XOP is, I think, the easiest thing to invest in. Jeffrey Gunlock talked about it at Sohn. There's all kinds of big time guys out there saying just buy XOP. And I think that is a super easy thing to do. Here's why. Okay, I got a couple more things to talk about if you want to hang in there with me. Let's take a look at XOP's holdings. Right? So I'm thinking of getting rid of XES, which is this oil services. And I'm thinking about just adding to this. Why? Because these companies I know are going to show blowout earnings in the next couple of quarters. Think about it. Most of these companies went cash flow positive at $50 a barrel. And now they're realizing closer to 60, and by next year they'll be realizing 70. These companies are becoming cash flow machines, including Chesapeake Energy, which we own the calls on. Yeah. Oil might cause the next market crash. Take a look at this chart. Okay. Let's put SPY on it. Let's superimpose it with SPY. Okay. Let's normalize it. See? Look what happened before this really hit the fan. We get quite a spike in energy stocks. And they rallied here too. And then, you had the 2014 whoosh. Look how high these could still go. I expect XOP to set an all-time high. It was... What was the price here? Give me the price, man. I gotta get rid of SPY here. I don't know what setting I'm missing. Original. There we go. How's that? There you go. 81. There you go. Here you have it. I believe the XOP will break its all-time high in the next 2 years. I could be wrong, but I bet it gets somewhere in here at least. I think Chesapeake's going to go to around $8 a share, and if they sell what I think they're going to sell, that opens them up to be a huge winner when natural gas really starts wiping out coal, which will start happening in the early 2020s. At some point, we're gonna outlaw coal, and it's going to become more and more evident to everybody. Climate change deniers are going to have to acknowledge that coal is one of the worst things we do to the planet, if not the worst thing we do to the planet. And if we don't reduce methane emissions and carbon dioxide by just shutting down coal all over the planet, to the point where we don't even sell coal to the rest of the world, that means natural gas will be a huge winner. It's already going in that direction. I just think there's going to be legislation to propel it. And I see a blue wave coming, so I think it almost for sure happens. It won't be just trying to put them out of business. Economically, it'll just be a law saying, "Look, you're done. Here's your 5 years window, and here's a jobs program for all your employees because they need to wrap that in there. And to the bondholders, maybe we'll help you get the par or par to par, maybe 70% of par or something." So I think Chesapeake is going to 8-ish for sure. But if they sell what I think they're going to sell, I don't think this is ever happening again. But I think this area in here, I think you could see Chesapeake in the 20s again. Because they will become a near debt-free natural gas producer once they sell a couple more hunks of oil-producing land. And then they'll be like a lot like Antero, where they are just a Marcellus and Utica-based company, right? Just be a big-time natural gas player. Maybe they keep the land out in Wyoming too. We'll see. All right, is that it? All right, everybody have a great weekend. Remember, it's summer. There's things much more important than looking at your computer screen. And stick with your best ideas. Don't get excited about having to own more and more things. And avoid FOMO and think more about fog yak. That's what we'll call it, fog yak. Fear of getting your ass kicked. Because there's a lot of things coming that could be bad here in the next several months. I hope they don't manifest, but we don't know. And when we don't know, we need to take a step back. Risk management. All right, have a great day.